Thanks, Dave, for that intro. Thanks very much for coming, everybody. It's great to see so many people here in sort of the crypto space. And thank you very much for, Digital Jersey for organising this. I'm not going to speak for that long. I am a lawyer. We had a debate earlier about whether or not, when we present in the crypto space, we should wear ties or dispense with them. I'm quite old-fashioned, so I still went for the tie option. So I'm just going to give you a few sort of thoughts about what I've seen in this space. And I am a traditional financial services corporate lawyer, spent 10 years in the city before I came here 7 years ago, and really have had an incremental exposure to crypto as an asset class. And so I'm just going to give you a few thoughts on where we are now and where I think the direction of travel is for the jurisdiction. So where we are now, well, what does Jersey do well? Okay, well, Jersey, as we know, is good at financial services. We do funds, we do corporate, we do real estate, we do administration, we do custody. So, where does crypto fit into that? So, I mean, in the fund space, which is what I sort of have drifted into, if I'm being quite honest, we started as a jurisdiction really quite well. All the way back in 2014, we acted for global advisors. The island, the JFSC, very bravely, in my view, authorized the world's first regulated Bitcoin investment fund, Gabi PLC. And that was actually quite a bold statement of intent. Since that time, we've done bits and pieces. Last year we had CoinShares One, we had Techemy. These are Ether-denominated funds. People actually putting Ether into funds, not fiat currency, but actually Ether, and using our Jersey private fund regime, which is a great regime for sort of first-time fund managers. And you'll hear later from Bletchley Park, from Lewis Fellas, who's the CIO there. He's relocated from Hong Kong to run his crypto fund. Elwood Capital Management are launching a crypto fund. Why are they coming to Jersey? Because they are going to other places too. I mean, it's not like Jersey's got a monopoly. We're a competitor jurisdiction to a lot of other places. I think crypto as an asset class is obviously quite high risk for a lot of investors. So some investors who want to dip their toe in the water of maybe putting a bit of money into crypto. We'll do it via a fund. We don't know anything about crypto, but we'll give it to a fund manager who purports to know something. Why not go to Jersey, where the regulatory regimes afford that extra bit of protection that aren't perhaps available in other jurisdictions? So I think we're in a good place on the fund space. But that's not it. Finally, our virtual currency exchange regulations are being fired in anger. We have Binance here. You'll hear from the guys later on. We've got other cryptocurrency exchanges talking to the JFSC and coming here because they like Jersey as a jurisdiction, both from a time zone perspective, and it gives them a regulatory badge that they possibly can't get elsewhere. Or when I say a regulatory badge, I mean a meaningful badge. We've had these virtual currency regulations in the past. We've got lots of other jurisdictions rushing out Blockchain Act. BVI's even got a Blockchain Act or something, a Digital Currency Act or whatever it's called. But does it have teeth? Does it mean anything? It needs to be underpinned by a good financial services jurisdiction with a good reputation. I think at that point it's probably worth saying, and I think Dave touched on it before, we are, as an island, a financial services jurisdiction first and foremost, which is crypto-friendly, in my view. Others might disagree. We are not a crypto free-for-all. There are some jurisdictions that have put their flag in the sand at this end of the risk spectrum. I don't think that is the right place for Jersey. We have built on what we've already got. There are other people wanting to do crypto custody. We've got custodians here in Jersey. It's a pretty well understood sort of, job or role or business in the analog or traditional asset class. How do you custody crypto? You know, how does that fit in within our existing regulatory regime? There are answers, and we have people coming here. So that sort of funds and other financial, other crypto businesses. I think lastly, and there's been quite a lot of media around this, tokenization, ICOs, we've done a few. The island has done a handful of ICOs. We've done enough ICOs for ourselves, the service providers, and the regulator to get up the knowledge curve, and well done to the JFSC. They got up the knowledge curve pretty quickly to get out some formal guidance notes, which are very purposive, they're very sensible, they focus on investor protection or investor disclosure, governance, and KYC, the same kind of things that you want to focus on when you're an investor in a traditional asset class. So I think that's where we are at the moment. What's next? Well, I've already talked about funds. Hopefully, the more funds we get here, the more funds will come. It will become a snowball effect. It will become a self-fulfilling prophecy. We'll have some crypto custody. We'll hopefully, have some more cryptocurrency exchanges. I don't think that's an issue. I think one thing and this is kind of my thought for the day, having sort of seen what's happening in the ICO market and been to a few conferences where there's some real thought leaders in this space. Okay, so most tokenization is done on the Ethereum blockchain. And a bit like Bitcoin, Ether, which is obviously the gas of the Ethereum blockchain, was at a spike in value, a high in value, not so long ago. I think it was trading about 940 sterling to one Ether about 6 months ago, maybe a bit longer. So lots of people thought, hey, I'm going to do an ICO. I'm going to do Love Coin, find love on the blockchain, or send people to heaven if they buy a Jesus coin. If you buy 10 of them, you've got an even better chance of getting in. Does anybody know what this one is? This is my favorite. This is Spank Coin. Okay? Absolute nonsense. Lots of get-rich-quick scammy ICOs. But with the decline, some people are bemoaning the decline in the price of Ether, but actually it's had a slightly, in my view, and I speak as a sort of, I'm not a crypto evangelist, it's had a positive effect in that the coins coming to market that are launching now, you've got to work much harder as a promoter of one of those ICOs to get it away, 4 or 5 times harder mathematically. And so you're seeing much better coins launching. I think this year there's about 530 odd coins coming to market, and the websites they're ranking good coins. There's much more sort of investor data that you can access than was previously the case. Coupled with that is, I think, a realization amongst the crypto community, amongst the sort of token community more accurately, that trying to have that quasi-libertarian, hey, the existing global financial regulatory framework doesn't work, we're going to stay outside it in the blockchain. It doesn't kind of work. The United States Securities Exchange Commission, for instance, has a lot of power and it has a lot of reach. Yeah? So I think there is a maturing the attitude of let's not waste all this time and energy trying to stay outside the existing global capital markets regulatory framework. Let's work together to try and fit within it. And I think that's where Jersey comes in, because we are a financial services jurisdiction. If, we've got the guidance notes, if we get local expertise here on how these things work, how they should be governance, what to look for, I think tokenization is one aspect where Jersey can really sort of benefit and profit. There's also a lot of talk about, hey, we're going to do tokenization of analog assets. You know, why buy and sell gold in the traditional fashion when you can buy and sell a gold token or a real estate coin? The amount of calls I've had about real estate coins, I've lost count of, or oil, or any other sort of analog asset, traditional asset class. If you can tokenize it, that's great. Why is it great? Because, as Dave said, you are going to massively reduce transaction costs. You're going to reduce transactional friction. And I think that is an opportunity for Jersey, but I insert the proviso that it's an opportunity only if the local financial services community here gets up the knowledge curve about how crypto works. That's kind of all I really wanted to say. I mean, Dave said that you don't want to listen to a lawyer for the rest of the day because you can go to umpteen conferences here throughout the year, all of which have got the same old people talking away, suit and tie, you know, not a hoodie. But I think you know, it's incumbent on all of us to get up the knowledge curve and educate ourselves and stay out late at night and read those books that I read and do some coding club and get your head around this stuff, because the direction of travel is that financial capital markets regulation and crypto are going to continue to converge, and we need to be at the epicenter of that. Okay.